So we had a very large squeeze to end last week over here. As you can see, we had 3 gap ups in a row, and not only gap ups, they actually held the gap. So we didn't see a gap fill during those days, which typically shows a lot of bullish emphasis to the upside. Personally, I expected more downside, at least from our last video that we did on Wednesday. So this was definitely uncharacteristic market behavior, especially with the sheer force that it had to the upside. So a lot of shorts have been squeezed out of the market. I am looking at this chart structure right here. We have this first yellow line that starts at the bottom of this October 13th low, and then also at the middle of August high. If you draw both of these yellow lines across, we are just about retesting this level, a very key retest, especially for bears. If you want this thing to start going, especially throughout the month of April through June, which is my expectation of downside, you do want to see a hard rejection starting this week off of this retest over here. We have had a few ascending patterns so far, as you can see here in these 2 yellow lines, as well as these 2 yellow lines. And then also we had one over here that did break to the downside. However, we found a support off of this gray trend line, which was the previous resistance that we crossed over from this past kind of like large rally that we had throughout the month of January into early February, until we had that downside later. We broke below it off of this retest in about the middle of March, but then got back above, retested it, and continued up a lot higher. So this week is very critical. Being able to stay below this trend line, especially around this 4,160-ish range, is critical for the bears in order to have downside to the rest of the month. So again, this week is very key. Another thing I'd like to make a point of here is this large supply range. So this purple box here is a pretty substantial supply range that we actually traded straight through from this past week. Very uncharacteristic of the market. Typically, whenever you see these types of ranges, at least in the past, you tend to have chop within the range, or you find support near the top, as we saw from this past time over here. The same thing with a resistance if you ever try to retest it, like we saw over here about in the middle of March during this relief rally there. But as of this past week, especially from Friday, we saw it slice straight through the entire supply zone. So if you are a bear here, especially for the next couple months like I am, I do want to see a rejection from above, which would mean that this would be a fake breakout from the past week. I'd like to see a weekly close back within the range. That would show that this was a fake breakout from this past week here, like I just said. So I would like to see this fall back below, especially this white box. This is a more precise supply / demand zone that has worked very well in the past. Again, as you can see over here, we have had a lot of bounces off the top of this purple box / white box here. So this is a very key level. And again, as a bear going into the summer, I would like to see a rejection off of this to continue the downside. Undoubtedly, we have seen a lot of new bulls in the market after the last couple of days. Again, just based on price action, I don't blame you for wanting to become a bull, especially after what we've seen here. However, you do have to be very, very careful, especially as long as we stay under the high that we made all the way back here around this 4,200-ish level. Every single substantial uptrend thus far, especially within the past over a year now, has been a bear market rally. And fundamental wise, I just don't see a reason why the bear market would end anytime soon. Even if you look back at previous bear markets, you can see we're not even close to the overall duration that the market prints in a bottom. Typically, the average to find a bottom of previous bear markets, if you look back in history, is between 17 months to around 26 months being the longest. That was the dot-com bubble before you actually find a bottom. So far, we just completed 15 months, which I would consider would be within the bear market. However, the low that we made on October 13th would only be 9 months. So that's about half of one of the lowest or shortest time periods of an entire bear market. So in my opinion, we still have not seen those lows yet. Obviously, timing is a whole other component to it. Actually, as we saw it from the previous retest of the downward trend line, which is this yellow line right here. I'll go to the daily chart, and actually I'll do it on this other chart over here just so it's more clean. This key trend line over here, we saw a lot of dark pool premium, if you remember, and I said that the bullish scenario of this was possible accumulation around these levels. My bias was actually towards the accumulation side. However, a lot of the other variables I used were pointing to more bearish outlook for the overall market after a short relief bounce. We ended up getting a short relief bounce. However, it continued a lot higher afterwards, much higher than I expected for this entirety of the move. So those dark pool prints were definitely a lot of buys within this range. We saw over 5 billion in premium all along this downward trend line over here around this accumulation phase. So now the key thing is to watch the dark pools yet again. Are we seeing selling as we continue up? That is a very telltale sign of another down leg starting afterwards. That's something that I'm certainly going to be watching for, especially after we saw a lot of that accumulation around these levels of roughly mid 3,800s to mid 3,900s. We saw billions upon billions around those levels. So I'd like to see something similar, especially as we continue to grind higher here or stay around this range. I'd like to see confirmation of a lot more selling up here by those institutions. So if we look here, just based on SPY flow from Friday, nothing crazy, but still a lot more put flow in comparison to call flow. But if we look over here at the dark pool levels feature, you can see we actually saw 4.5 billion in premium at the 403.65 level. So 4.5 billion, definitely a lot. Again, very rare to see something over 3 billion, more or less 4 billion. And what's interesting here is this was way below the closing price of SPY from Friday. So this level is very critical, especially if we were to fall below it within the next 1 to 2 weeks, because like I just said, I'm looking for potential selling as we continue up. Even though, as you can see over here, if I go to SPY's chart, even though that price is significantly below where we closed on the day, there's still potential because remember, institutions don't time it exactly. They don't time the exact bottom. We saw a lot of accumulation, like I said earlier, between that mid 3,800 to mid 3,900. So just around this range here, they didn't take the exact bottom of the move, but they still got accumulation where they needed to for a extended move to the upside. So there's a potential that is selling on the way up. Unlikely that it would have been just a buy as we continue grinding up. Is it possible? Yes, but it seems a little bit less likely that would be the case compared to buying around this range, which we did see them do from a couple weeks ago. So seems like there's a potential for that to be selling. I'd like to see confirmation again of some form of a pullback starting this week. We do have a key reversal date here coming up on Thursday. This is part of the 18-day cycle I've shared with you guys before. So far, very, very accurate. We had the bottom print last time that it happened here. And we also had the reversal start over here on February 15th last time it worked. So this one, I also have another minor turn date based on Wednesday. So the Wednesday-ish time period is very key for reversal. I'd like to see consolidation here to start off the week with potential minor uptrend going into these days for a hard reversal off around the Wednesday to Thursday time. So do watch for that. But again, I'm going to continue to watch the dark pools as we go higher. The print we saw on Friday a bit iffy because we did close a lot higher than that. So we will see if we do have a retest of it or if it wants to fall below here. Again, coming up this week or the following week, there could be a potential of distribution on the way up. But again, if we see a lot of prints closer to the price that we closed on Friday heading into this week, then that could be a confirmation of a potential selling, especially if we see ones like this 4.5 billion. It's a lot of premium to see, especially as we go higher, and it's very unlikely that that is buying as we go up. So I am watching for something like that. Another note I'd like to make is we are back within this demand zone for the VIX, back under 19. So again, a lot of bullish sentiment just from the past couple days after we saw that large squeeze. So again, do be careful, especially if you are just a bull and you disagree with my overall macro thesis for the market of more downside to come and new lows as of this year. Let's say that you do disagree with that. We all can have our own opinion on the market. Do be careful here in general. There's one thing you do need to be careful of is just the VIX under 19. Characteristically, every time it's been under 19, it wasn't under for very long, and each time it has bounced up to around the 30 plus range. This has been the shortest, or at least the most subdued bounce that we saw from the banking crisis just from earlier in March compared to what we saw from this past year in 2022. A lot of these went to the mid 30s. This one was only about the low 30s from the last spike. So again, just be careful when you are under 19 like this. You typically don't want to be a buyer of equities whenever the VIX is under 19, at least within the past year now. So if you were fortunate enough to catch the rally that we saw from this past week, just do be careful here. Hedge accordingly if you need to. This should probably be more of a risk off period in terms of just overall equity exposure. So again, just be careful of that. And one last note with that, if we look over here at the dollar, I would like to see continuation throughout this week. I did like how we saw some form of a double bottom from this past week. Again, we did have a pickup over here around the March 23rd, March 22nd-ish time that did end up getting sold off quickly afterwards, but we saw another bid here on March 31st for Friday. And we have seen continuation thus far for today. So again, I'd like to see continuation up from this double bottom formation. This is right around my yellow trend line. A bounce off of that would be very ideal for more downside in equities, because remember, we do need the dollar to exhibit strength if there is going to be some more downside in equities like I am predicting. So I am watching for further upside here on the dollar. And last note for the video today, Apple, do be careful of this setup. Every single time we've touched this upper trend line, it has marked the top of not only Apple's uptrend, or at least its bear market rally, but also the overall market's bear market rally. Look at the last time we did reach this trend line. We just about wicked on top of it, which prompted a fake breakout to continue to the downside. This happened to be August 16th, August 17th. If you remember that date, that was the exact high, or just about that time period of the exact high in the S&P 500. Also back here, end of March, early April, also happened to be the top of a huge bear market rally in the S&P 500 and the NASDAQ, and then we continue down off of that. And each time Apple has reached this trend line, it has marked hard resistance that went to new lows afterwards. So just be careful, especially up here. A lot of new euphoric bulls, like I said earlier in the video. So you just need to be very careful up here, even if you do disagree with my overall opinion on the market, to have a lot more downside into the summer from here. So I just wanted to make that clear in the video today. Appreciate you guys watching, and I will see you guys on Wednesday.